Hello everyone, how are we doing today? Hope we're all doing good. If I could get a quick mic check and make sure that you guys can see the dollar index monthly chart. Awesome, everything's good. Sweet. All right, everyone. Well, thanks for joining us. Welcome in, welcome in. Glad to have you all. Guarav, good morning, Dylan, from Australia. Awesome, Guarav. Glad to have you, brother. Anita, hello, hello. Ahmed, hey, Dylan. Hope you are well. Yes, sir. I'm doing great over here. Ready for another week. Awesome. Danisha, happy Sunday. Mitch, my man. Rich Carey, happy Sunday. Happy to have you, brother. David Vega, good afternoon. Glad you're joining us, my man. David, back into the indices, my man. Glad to have you. Olawale, happy Sunday. Ready to have you. Happy to have you. Christopher, best place to be on Sunday afternoon. Awesome. Glad to hear it, Christopher. Glad to have you, brother. Top 5 rappers of all time. It's an honor. Awesome. High speed trading. Good day. Happy to have you. Thanks for joining us. David Lombard, sounds good. Thanks for having us. We see Dollar, yes sir. Awesome. Stephanie, Mike and Chart, all good. Thanks for joining us. Glad to have you. Nia, hello, hello. Christopher, greetings from Sweden. KK, hey buddy. Hope all is well. Yes sir. Doing good here, my man. Hope you're good. Hello from India. Awesome. Hello, hello. Eubene, good late afternoon. Yes sir. Christopher, like the stream, guys. Thank you, Dylan, for your consistency. Awesome. I really appreciate the support and generosity, Christopher. It means a lot, brother. Good afternoon. Awesome to be here. Thanks for joining us, Fish. Roshan, what's up? What's up? All right, guys. Well, let's go ahead and get into it. Let's not delay anymore. So real quick, before we get into the technicals, just want to touch on the economic calendar and a few other salient points that you want to have in mind going into this week. So we've just seen a new month, but more specifically a new quarter open up. So we just finished October going into November. So because of all these factors, there's different things we have to consider in terms of timing elements and projections moving forward with these new timing elements. So I'll share a little bit of the 20, 40-day, 60-day look back that I use at the beginning of each new month and share how I use that in my analysis. But outside of that, just touch on the economic calendar, and then we'll go ahead and get right down to business. So looking at the economic calendar, I don't believe I have it up. Let me go ahead. Yeah, so it's on the other screen, so we'll just pull it up on your own charts, and I'll just cover what I'm seeing here on my side. So no news Monday. Tuesday, no news other than FOMC member Waller speaking. So those days, not expecting a whole lot, but again, with the climate we're in, we don't need a lot of news to move these markets around, again, because of everything that is going on. Wednesday, Fed Chair Powell speaking. So no real exciting news drivers Monday, Tuesday, Wednesday. Again, obviously, other than landmine, Fed Chair Powell speaking Wednesday. So I'll probably direct my attention, if you want to trade early in the morning, 7 to 8:30, that would probably be a nice silver bullet that day. But my attention is more than likely going to be in the PM session, afternoon, after the Fed chair speaks. Because again, whenever the Fed chair speaks, that opens up a lot of manipulation and manual intervention, which is simply put where the algorithm is taking its hand off price and the humans are manually intervening with it. And again, that's where our concepts are more likely to fail. So again, we want to recognize that and again, prepare ourselves accordingly. Thursday, Friday, I am expecting better trading. We have news at 8:30, but Fed Chair Powell speaking again at 2 that day. So again, not the best economic calendar this week, but we'll still find setups. There's still plenty of intraday volatility to take advantage of these opportunities. And then Friday, I will be expecting a nice trading session. So that's what I'm looking at for the economic calendar for US dollar, and that's how I'm going to be trading this week myself. Frank, hello, Dylan. Hello, hello. All right, so dollar index monthly chart. So let's go ahead and zoom in and get into the business here. Full screen. Pull up my notes. All right. So I'm going to go into a little bit of the details as to why I'm patient. You know, these past couple months to few weeks, I've been going into a little more detail with you guys behind the analysis. Again, not just sharing, okay, this high, this is an invalidation, and we're going to run to these levels here, here, and here. while that's good, I'm also sharing a little bit of insight again behind the curtain as to what's indicating these levels as a draw on liquidity and targets. Again, just to show what it is that's going into these analysis. So the reason for caution, for patience last week was largely because we opened up a new month. So at the beginning of a new month, we expect manipulation. We expect the market makers to do something that's contrary to the move we're expecting. So we'll look at that in lower time frames. I'm going to cover how I'm qualifying that as we go down through the time frames, but those are all things you want to consider and think about. Remember, it's always time first, then price. All right, so monthly chart here. Quarterly shift objective again was hit July, trading lower. So again, we have accumulation, manipulation, distribution higher. So again, we were all over those moves here, and then the new month opened during what week? Non-farm payroll week, which is a week of caution. I told you guys what it is I'm personally doing these weeks, which is taking it easy. I'm journaling, I'm back testing, I'm studying, reviewing how did I trade in the previous quarter, how did I stick to my model, how can I refine it. Again, doing things outside the charts. I'm not terribly interested in trading non-farm payroll weeks, especially considering that it is coupled with a new month opening, because again, a lot of tomfoolery is going on there, and in my opinion, there's much better weeks to trade and be pushing it. So looking at this week here, we opened, did a little run higher, and then we traded lower inside this monthly fair value gap. So what I'm going to be watching moving forward is how we trade inside this level. If we're going to continue rallying and remain bullish on dollar, which is what I'm expecting, I'm still looking for higher prices on dollar. I don't look to call tops and bottoms until I'm decisively shown that the market is indeed changing tide. So looking at how we're trading inside this monthly fair value gap here, we basically traded just shy of midpoint, and I'm going to be monitoring how we trade around these key levels. If we are going to remain bullish moving forward, I will expect this now down close candle to then for this to be a wick, and then an expansion higher after this manipulation. So again, we open, manipulate, expand. So moving forward, that's what I'm expecting. And again, for Forex traders, for indice traders, you do want to have all these things in mind moving forward, because dollar is going to be impactful across all those different asset classes. So again, monitoring this key level. So you want to have this level and then the consequent encroachment and then the quadrants on your chart if you would like. So weekly chart, let's go ahead and drop down into it. So again, nice expansion higher into our targets, these highs here, 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 and the weekly fair value gap. So once we hit that, that really rounded out the high for the last couple months, and then we entered consolidation. I've not been calling foreign exchange market. I haven't been calling dollar, because I'm simply not interested in markets that are consolidating. I'm just going to wait for it to leave that consolidation and show me in an obvious manner what it wants to do. So again, patience is key in trading. And again, if you don't come in with patience, the market will unfortunately teach it to you. So looking at this previous week, we opened, smashed lower again into that monthly inefficiency, and then we fell just short of midpoint. So what I'm going to be monitoring is how we trade inside this up close candle here, which would be a bullish breaker, extending that through. So if we are going to rally, I want us to do it from this monthly inefficiency and this weekly bullish breaker. And then I want to see us trade higher, attack these equal highs, and then reprice into this high here, and then the remaining portion of this weekly inefficiency. So moving forward, that's what I'm going to be expecting. That's what I'm going to be anticipating with my trading. So again, monitor these key levels here, and then we'll want to see a reaction higher. If for some reason we start trading lower and then we get below it on a closing basis on a daily chart, then I may have to reassess and look for a deeper retracement. But again, market's been going straight up, and as we know, markets don't keep going straight up. They have to have some measure of correction or retracement. So again, none of this upsets my longer term outlook on the dollar index. And then I'm going to touch on seasonality as well, seasonal tendencies for dollar and the indices, and I'll touch on how I'm using that in my analysis as well. So daily chart, let's go ahead and zoom out. So again, longer term, I still like these upside targets up here that we've been looking at. But again, we repriced higher, nice rally, and then we entered a consolidation. So once we entered this consolidation here, I was very patient. I was demanding of the market. I said that if we were going to rally higher, I would need to see the market trade higher and close and continue. Again, not trade higher, stall, pull back into the range, because again, that indicates to me that we're going to remain in consolidation. But again, because I'm bullish, because I'm still expecting higher prices on the dollar index, I'm looking at this as a bull flag. So again, we don't trade bull flags. We look to target or victimize that type of trader's mentality. So the fact that it's consolidating, drop lower, these are a few factors that I like that tell me we're still going higher. Equal highs here and here. Markets typically aren't going to top like that. Looking at the consolidation before the drop, this is to me accumulation, manipulation, distribution. So I'm looking at this as AMD. So usually we get our accumulation, our manipulation lower, and then we get the repricing higher. So personally, that's what I'm expecting this to look like moving forward. That's what I'm going to be anticipating with my trading. So I see this as a drop lower. Anyone that saw this as a bull flag is now stopped out. And anyone that tried to chase this market lower is now short. So if they're going to take it higher, in my opinion, they're going to want to do it from here. So that's what I'm expecting moving forward in the dollar index. So a couple other key levels you want to have that align with that monthly fair value gap consequent encroachment would be the weekly, or not weekly, excuse me, the daily wick midpoint. So look at that 50%, extend that through, those levels kind of align. So I look for key levels that align themselves, and that's what's considered nested PD arrays, and that's a strong algorithmic reference point. So what I'm going to be looking at moving forward is how we trade inside these levels, and then again, we'll break this down in a lower time frame. But again, I'm still going to be looking for higher prices in the dollar. So a couple other points I actually wanted to touch on before we get moving. So if we are going to trade higher, what do we need to do with these key levels? So we need to trade lower. We can trade a little lower, that's fine. But then we need to displace higher aggressively. So we need to run through this down close candle. I don't want to see it act as a breaker. I want to see us trade up through it aggressively. And then if we do that, that tells me that I'm on side and we're going to continue repricing higher. Failure to rally or getting below this monthly inefficiency on a closing basis, we likely look for this inefficiency here, and then how we trade there, we may have to look for these equal lows. But like I said, I'm still looking for higher prices. And again, I'm going to expect that to happen from these key levels. And then from there, my targets would be this inefficiency here, and then these equal highs. And then through that, we have all these levels that we discussed from the weekly chart. So let's drop down into the 4-hour. So looking at last week, again, we always like to look back before we look forward. So it provides us with that context. So seeing how on Monday we opened, we traded higher, cleared out the buy side here. We were unable to sustain that level. We didn't continue rallying, displacing through it like I would have liked to have seen if we were to remain bullish. We rejected it, violated this bullish order block, indicating to me that we're weak. And then what level would we run for if the algorithm is going to reprice lower? We have these equal lows here and here. So equal lows, market runs into those, and that monthly inefficiency. So something you're going to want to monitor here would be this monthly fair value gap along with the lower time frame PD arrays. So let me go ahead and stick. So this thick black line here is a 4-hour bullish order block. So let's go ahead and refine this further. So I would want to see the market rally from these levels, from the premium end of the monthly fair value gap and this bullish order block. However, if we get below this monthly bullish order block, my attention is going to go to these equal lows in here. Can we open, trade below these equal lows, sweep those lows, and then rally higher? Yes. So that's another thing I am considering as well. But again, we would have to reject these lows sharply. So we can trade down into the sell side, but then we'd have to see a sharp rejection higher, and then that would tell me I'm on side looking for higher prices. But again, as long as you remain above this bullish order block, that's where I'll be expecting the reaction from. So I'm going to be considering different things, having to still weigh some things out with everything going on in the world, the climate we're trading in, and of course the price action. It's not as clear cut and dry as it has been in other weeks where I can just say, all right, we're looking for higher prices. Watch, we're going to manipulate down to this level. It's going to form the low of the week, and we're going to rally higher. It's forcing me to apply a lot more analysis concepts and wait for certain things to develop a more hardline bias moving forward. And again, quarterly shifts, these quarterly moves that take place every 2 to 3 to 4 months, they take time to set up. It's not just constant action on these higher time frames. Again, we just saw that the quarterly shift again traded higher, hit that rally for several months, and then we enter consolidation. And then we have to just wait for the market to show its hand about to what the next obvious move it's going to be. So again, that's why I've been practicing patience and why I have not been pushing it a lot in my own trading and with the analysis I've been sending to you guys. So those are all things you want to take note on. Again, it's not just having targets hit, getting in trades. You also have to know when to dial it back and pump the brakes and wait for higher probability conditions. So let's go into the bond market, and then I'll touch on currency as well. Earl Garrison, thank you very much, brother. Appreciate the support, my man. Much appreciated. All right, so monthly chart for T-bonds here. Again, we're still seeing that bearish order flow on that monthly chart. We traded down into our significant quarterly shift target, which again, for these past few months, we've been looking for lower prices on bonds, which is again what told me we'd be going higher on dollar. So we finally repriced here down to these equal lows and to this monthly inefficiency we've been watching. So we hit that level, hit a significant level of liquidity, and then what are we doing? We're retracing, which is normal to expect. So when do markets retrace? You got to understand different factors. But again, 1, 2, 3, 4, 5, 6 months of consecutive selling. And again, we were all over that like white on rice. So we hit that external range liquidity, and then we pull back into the range. So what I'm watching here is this monthly inefficiency. So again, this is why it's a matter of having to weigh all these things out. Because if the dollar is going to continue higher, what would have to happen in the bond market? We'd have to see a rejection here. So this entire week, as I'm not trading as much, not sending as much analysis, I'm still watching the market. I still have my hand on the market's pulse, so I can be close to price action for when I do want to get back into pushing my trading a lot. So with that, what I'm going to be monitoring here is this monthly inefficiency and how we trade there. So if we see a reaction, if we sell off from this level, what's that going to tell me dollar is going to do from the inefficiency it's in? So it's a matter of weighing all these things out and qualifying them. So again, that's why intermarket analysis gives you unparalleled precision and insight into what the markets are likely to do. So you want to have this inefficiency on your chart here moving forward. All right, so weekly chart. Let me go ahead and take this off here. Okay. So we had this weekly inefficiency here. Again, we traded down into the key levels we were looking for, and then we saw the market trade higher above this swing high on the weekly and into this inefficiency. We repriced right into the midpoint there. Beautiful delivery, and then we pulled off the high. So we're going to refine this a bit more on the daily chart, but just looking at it from a weekly perspective, if we are going to continue dropping on bonds, I prefer us to do it from here and not even get up to this inefficiency. We can trade up to it, but it's just not going to be as bearish for me, and I would prefer to see a reaction from these levels here. So I'd want to see the market hit that level, as we already have, and then sell off from here. All right, so let's drop down to the daily chart. So again, I shared with you guys last week that we are bearish, so I didn't want to call this market higher. Again, I don't call tops and bottoms. But after we took out this low, we traded back into this inefficiency here and failed to sell off. We tried to, but then we couldn't. So looking at this down close candle, breaker, and inefficiency, I said that if we traded through 50% of this fair value gap here and closed above it, then my attention would go to these equal highs here and here. Why? This is where narrative comes in. If the market's been bearish and it's been dropping for the past year or two, but looking at just the most recent drop, the past 6 months, we've been dropping. So where are trailed stop losses? They're from shorts and they're here. So the market is going to look to do what? Reprice into those to knock out those traders that did not take profit at the appropriate levels. So again, targets are hit, and then what do we expect? Some measure of consolidation and potentially retracement. So we retraced into the buy side here and here. Hit that perfectly, and then we saw a nice snap lower after rejecting those highs. So if we are going to continue seeing lower prices on bonds, I would want to see us reject from here, accelerate lower, use these inefficiencies here not as support but as inversion. So get below it, use it as resistance, smash lower, and then the targets would be, well, first this big beefy down close candle as a bullish order block. That'd be a first downside target. And then through that, I suspect we'll clean out these equal lows in here. And then further downside takes us into the monthly inefficiency. And then you want to break that up into quadrants. So the 106.20 about would be a good target. And then the midpoint here. So that's what I'm looking at on the bond market moving forward. But again, I'd want to see the rejection from these highs because traders were now stopped out. So now I suspect the market would be permitted to drop lower. All right, so that's it for bonds. Let's go into foreign exchange. Euro dollar. All right, so I'll touch on euro and pound, and then I'll take some questions. So you guys usually have me look at some different currency pairs, and I'll be happy to take a look at that for you after I get wrapped up here with my analysis. Lotus Kano, thank you very much for the donation. Your support is very, very much appreciated. Thank you. Papa Vlad, what's going on, brother? All right, so monthly chart here for euro. Again, it's really just going to be the inverse of dollar. So just flip the dollar analysis for euro. So I'm not going to go too deep into it, but still share the salient points that I'm going to be looking for. So again, we've traded lower. We saw this trade into a premium, and we reject it. So all we've done was trade up into a premium inefficiency. David Vega, indices being analyzed? Yeah, of course. We'll take a look at indices. Always, brother. Always. Save the best for last. Save the best for last. So monthly chart here for euro. Nothing's changed the scope of what it is I'm going to be looking for and the framework that I'm still expecting for the currency market. All we've done is trade up into an inefficiency. So seeing that we traded up into this SIBI, sell side imbalance, buy side inefficiency, I'm going to be monitoring how we trade there. What I prefer to see is us reject and sell off and run for this discount monthly inefficiency that I'm looking for. So I'd want to see something like this on the monthly chart. But again, we'll refine this through the time frames. So I'd want to see the market sell off from here if we are going to remain lower. Again, we saw displacement lower, hit our targets, and now again, a level of retracement is to be expected. And euro moves really closely with the treasury bond market. So for those of you guys that trade euro, dollar, I mean, not that we trade dollar, but we use dollar as a barometer for our analysis. You do want to look at the treasury market because those are all heavily weighted in dollar and the euro. It's a little bit of free game there. But again, I will be monitoring how we trade there and then the key levels that we look for. And then I'd want to see a rejection, a sell-off. So again, right now, this is a bold blue candle. But if we are going to be bearish this month, again, we expect open manipulation. And then I'd expect this to be a bearish black candle after rejecting these levels. So that's what I'm going to be anticipating here moving forward. All right, so again, just that blue rectangle is that monthly inefficiency. So again, seeing that we called this quarterly shift move lower into the sell side here, and then these equal lows here, hitting all of our targets. Again, you guys know something that I share, that once we have targets hit, you want to be content. You want to live there for a little while. You don't want to be an action hound saying, okay, what's the next move? What's the next trade? And look to rush impulsively into what you think is the next opportunity. Because again, after large market protractions, so we already had the distribution occur below those lows. So the market's going to consolidate and build up more sentiment, which is why I have not been very active in these markets calling them out. Because again, I don't need the trade consolidation. I'm not trying to prove anything. I'm going to let the market show me what it wants to do on its timing. And then once it shows me that, again, you guys know we're going to be all over it per usual. So looking at this monthly fair value gap in here, we traded up into that. It's just like a little bear flag in here, like retail likes to see that, drops lower. They see the little bear flag pattern, stopped out. So I like to see those things. If they're going to reprice it lower, again, they're not going to let the bear flag crowd profit off that. They're going to want to take it to a premium, stop them out. Anyone that tried to chase this short here is now stopped out as well. So if we do sell off, it would have to be from this monthly fair value gap. If we start displacing through it, if we start seeing more animation on the upside for euro, again, which is possible, I'm not being as dogmatic with my viewpoint in these markets because, again, things can change at the drop of a hat. With what we're seeing right now, with everything going on around the world, with the unrest with these financial institutions, like just this past week, I do my business banking through Bank of America, and they're telling me that they're not doing deposits anymore because of a short-term issue with the financial system. So structurally in our financial system, there are real problems. Again, this isn't something just I know, and now you guys know. All these money managers, fund managers, they're all considering the inherent risk in the financial system. Again, World War III popping off on many different fronts, likely. So those are all things to consider and weigh out. That's why, again, I'm being very cautious. I'm not telling you guys, again, never put you in trades. You always have to do your own research, but more importantly, you have to understand how to manage risk. So with those disclaimers and things in mind, you do not want to neglect the risk aspect of this business, and you do want to consider those things. David Vega, that's wild. Yeah, man, it's pretty crazy. Olawale, word of the day, dogmatic. And we're expanding the vocabulary, not just trading. All right, so daily chart here again, just nasty consolidation. I want nothing to do with this. Yes, I can scalp. I don't even need a daily bias to trade. I can go into lower time frames and scalp all day long. But it's much easier to trade with a daily, weekly bias because, again, your trades are going to be much nicer. They're going to run way beyond what you thought, and you can really take down sizable trades when trading with a bias. So, again, do you need a bias to trade? No. Early on, you definitely want that as a crutch because it helps you filter bad trades. But once you know what you're doing, once you work with someone long enough who's teaching you how to do this, you don't need a daily bias to trade. You can just trade intraday volatility. So, again, there are setups in here. There's definitely opportunities. But again, none I'm interested in and none that I would share with you guys because, again, this isn't the highest probability market condition. So seeing how we traded higher again into that monthly fair value gap, I'd want to see some type of reaction here. Again, can we run up into these highs and reject? Yes, we can. But again, I prefer to see us just get weak in here, run lower. Again, I do not think markets bottom like this. Can we form a long-term bottom and trade higher? Yes, and I'd welcome being incorrect. And again, being wrong or right doesn't make me money, but it also doesn't lose me money. So again, this is just the scenarios that I'm weighing out going into these next couple weeks. But again, things can change abruptly because of the climate that we're in right now. So as speculators, as market analysts, they're all things we have to consider. So what I'll be looking at in euro again is how we trade here. So if we do expand lower, I'd want to see us get down through this down close candle, not use it as support, aggressively displace through it. And then that'd tell me we're likely going to clean up these equal lows in here and then run for the sell side. But having that higher time frame focus in mind, looking at this monthly inefficiency down here. So let's go ahead and touch on pound. Pound is a bit more weak in my opinion. So again, aggressive displacement lower on this monthly candle. Retrading back into the monthly fair value gap. So again, nothing's changed longer term in my analysis. So looking how we traded up into this inefficiency, I'd prefer to see this market reject lower from the discount level of this inefficiency, not even trade up into the premium end. And then again, that would indicate to me that this market is exceedingly bullish. And then if we get that rejection from here, again, this is a bold blue bullish candle right now. But if it is going to be bearish, I expect this to flip bearish and expand lower into the sell side here, and then eventually here longer term. But again, this depends on getting lift in dollar. So a lot of things I'm weighing out. So I'm telling you guys everything I'm considering because, again, with everything going on with the market structure we have, it's not clear cut and dry saying, okay, we're going here to drop because, again, things can change very, very quickly in this climate. So weekly chart, this fair value gap we were looking at, we used it as a target here on the downside. And then we saw we weren't able to close below it. Again, I would have preferred here we close below it, use it as resistance and run lower. But again, the market wasn't having any of that. The bodies were being contained within it. So that, again, pumped the brakes on looking for lower prices in the weekly chart for pound because of the signature here. And then again, we traded higher for some measure of internal range liquidity and this inefficiency here. So again, I want to see us remain below this breaker. So this down close candle here, high, higher, high. I want to extend that through because, again, we use PD arrays, not just on the side of the curve we're presently trading in, but we extend those through. So again, I'm going to be monitoring this level and these inefficiencies here. I prefer to see us stay below 1.248. And then if we do that, then that's going to confirm to me that this market is decisively weak. But again, we've had a huge market protraction lower. So again, it's reasonable to expect some measure of retracement. And then daily chart, again, equal lows here. Swing high, taking that out. So if we are going to remain bearish, we'd have to reject. If we continue displacing higher, then I'll take your attention to what levels I'd be looking for on the upside. But again, right now, that's not something that I'm expecting. I'd want to see us reject above this high and then sell off aggressively, running for these equal lows in here. And then longer term, if we do get that weakness in pound and we get animated through these lows here, my attention is going to go to this inefficiency here, and then eventually this external range, sell side liquidity here. So that's what we're looking at on the Forex market. So I was asked a question, when you say markets don't top or bottom like this, what do you mean? That is a good question. So here we have equal lows, right? Looking at this market, if it was going to make a decisive bottom, I would want to see better market structure around it. Again, market structure, again, would be a class, a webinar in and of itself. That's not something I can cover here, but I'll give you something that should clear that up a little bit for you. If we were going to rally higher for real, I wouldn't want to see equal lows left intact. I'd want to see us punch through this low here, create an intermediate term low, and then rally higher. So it has to do with market structure, has to do with liquidity, and also experience, which is the biggest factor. So those are the three things I look at when I'm saying, so I don't suspect this is a market that looks like it's about a bottom. Because then again, there's different things you have to consider there. Andreas, are you bearish on S&P this upcoming week? Perfect timing. Just what we're about to talk about. All right, so monthly chart for ES. Again, before I even get into the E-mini S&P and the NASDAQ, you do have to keep in mind what I'm sharing on the bond market and dollar. So all eyes on dollar and bond market, and then that's going to help you qualify what it is we're looking at in the S&P and dollar. So I'm going to touch on seasonal tendencies here briefly. So for seasonality, right now, stocks typically like to rally and dollar likes to drop. So money typically is flowing out of risk assets, and fund managers, asset managers are seeking yield in more risk-off assets like dollar bonds. So they're going to be selling what? Risk assets to do what? Purchase dollar and get the yield that comes with it around the seasonality. So you always have to look at it from a common sense perspective. Look at it like a business person. For those of you guys that trade the foreign exchange market, you have to look at interest rate differentials. If you're trading Aussie dollar versus the yen, or if you're trading euro pound, which again, I don't recommend the trade because there's not that much of a difference between the interest rates. But there's different things you have to consider. Back when I was trading more currencies, you have to look at all these factors. You have to look at it from a business perspective. If the yen is giving you a much higher yield on the currency than, let's say, euro is, what are fund managers doing? Money's going to be flowing out of euro to go into yen to seek that yield, to chase that yield that that currency is yielding. Hello, sorry, buddy, my assistant's back. So you have to look at it from a business perspective. You have to understand what these fund managers are doing, how they're looking at price action, and how money flows through the economy. That's why you have to look at all these factors, and you can't neglect certain points. Because again, all this flows like a Swiss timepiece. So looking at the monthly chart for E-mini S&P, again, keeping in mind what dollar is doing. You have to qualify this with dollar. And again, I just wanted to emphasize that point once more. So monthly chart for E-mini S&P, what I'm looking at is this inversion, fair value gap in here. It's a fair value gap that we got below, used as resistance. And then again, we saw that aggressive sell-off lower. So seeing how we closed below it and now we're trading back into this fair value gap. If we're going to remain bearish, I prefer to see us not get above this on a closing basis on the daily or weekly chart. So we can trade up, take out previous month's high, which is something that we can do. Come on, Sol. Come on, buddy. Get that. All right. So again, we can trade up into that previous month's high and into that inversion fair value gap, but I would want to see this keep price at bay and send us lower. So looking at the monthly chart again, the other point I wanted to discuss, again, I got a little disoriented there. So looking at this monthly candle, if it is going to be bearish, again, while this is a bold blue up close candle, I would suspect that we are going to reject and trade lower if we do remain bearish on the stock market. But again, there's different things we have to qualify and validate, which I'm going to go through as we go through the time frames, but also using that intermarket analysis, which is giving you that clarity that many of you lack right now. So let's go ahead and touch on NQ monthly chart. So again, NASDAQ, we traded into that quarterly shift objective, which was that week monthly inefficiency. We hit that level. So again, expanding lower the past 3 months into the targets we've been looking for. And then we opened the new month here. The first week of the month, as you guys know, I'm not terribly interested in trading, again, because of the economic calendar and because of the time of month. So again, you have to consider time on several different aspects, not just kill zones or intraday trading. So looking at how we opened up a new month, we're trading higher. So I'm going to monitor how we trade inside these key levels. Again, we have a little inversion fair value gap here on that monthly chart, but we also have previous month's high there. So again, we'll refine this as we go through the time frames. Let's drop down to that weekly chart. All right, so weekly, seeing how we traded into that sell side. So again, this is why I told you guys my quarterly shifts objectives were met. So I wasn't terribly interested in price action this past week. I didn't care what it did, sincerely, because we saw a nice move lower. So my quarterly shifts objectives were hit. And like I said, quarterly shifts, swing trade models, those aren't forming every single day of the week. You have to wait for the next obvious setup to form. And once we hit objectives and we're very oversold, not oversold using an indicator, we don't need indicators to tell us that. We just understand raw price action, and that communicates these things to us. So we're in a very oversold market that's in a deep discount that repriced below the exact target we're looking for and turned on a dime. Isn't that neat? Never gets old for me. So hits our targets. Again, beautiful repricing into that sell side. And then again, this week, I didn't really care what it did. I'm just using it to gather more intel going into the last 2 months of the trading year. So looking at this previous week, again, we always like to look back before we look forward, so it gives us that context. We traded higher through this monthly or weekly fair value gap there, and right into the consequent encroachment of the wick. So if you split this wick in half, that gives you the midpoint. So again, algorithmically, the market is repricing into that level. For who? Smart money traders that are keying off these levels for their trading. So looking at this here, we see that repricing higher into the wick right there. So given that we traded and closed above this inefficiency, that tells me it probably warrants a run above these highs here. So looking at how dollar is dropping, indices are rallying after being extremely oversold in a deep discount. Again, this is why we don't accumulate new positions in discount. We already saw this huge run lower, and I'm getting questions in live streams, in Telegram, on a daily chart when we're all the way down here, asking me, how do I get in this move now? How do I get in this move? You don't short discounts unless you're intraday trading, of course. But when we were seeing this rally here, I'm selling short. Seeing this rally here, I'm selling short on which accounts? Longer term swing trading accounts. Where am I looking to distribute my profits? Below this sell side liquidity. Algorithm offers it there beautifully right at the end of the week when I expect it. Distributing, and then again, waiting for more information, sitting on my hands. So like I said, the next draw, based off what I'm seeing in the technicals right now, is again these highs here. But how we trade there will be significant, and I'll cover that a little more on the daily chart. Let's go ahead and look at the NQ. So again, NQ hit several of my quarterly shift objectives. Again, these equal lows. I told you guys when we were here, I wanted to see those lows toasted. Bam. Through that, I like the weekly inefficiency. And then again, what levels do we look at on inefficiencies? Midpoint, volume imbalance, and then the low. So beautiful repricing there. And then again, the market turning on a dime, which again is probably not random. So looking at how this month opened here, how the month and the week opened, we displaced higher aggressively. So because we have a new month open, I was looking at the premium levels, and again, we'll refine this on the daily chart, but then we saw aggressive expansion higher into the consequent encroachment, 50% of this wick. So splitting this wick in half, you get a midpoint of 228.50. So looking at the high up here, 228.50. So the perfect high of the week right at that midpoint level. So what I'm monitoring in these intraday charts is seeing how are we trading at these key levels? Are we displacing through them? And that's how I was able to look for higher prices. Not that I was interested in trading it, because then I can see a market, I can see where it's likely to draw to. But if the conditions aren't right, I'm still not going to take a trade on it. So again, repricing to these levels here, and how we trade there will be significant. If we close above this on a daily chart, then we're likely going to run to these equal highs here, and that's what I'm favoring on the E-mini S&P as well. So let's drop down to the daily chart and get on with it. So let's look at the bigger picture here. So again, market maker sell model was completed, calling the smart money reversal all the way up here. SMT dropping. Again, each rally, we knew these were just sucker rallies. So we're selling into every single one of these rallies. We're not caught offside. We're not reacting to price like retail traders are. We know already what we're looking for, and we're meeting it before it does it. So again, all these rallies were just fake rallies that we're selling into. So as we're seeing these suspect rallies, we again get that aggressive expansion lower, and then the market maker sell model was completed here. So again, after we saw that, again, told you guys my objectives are hit. I'm going to wait for more information and allow the next price run to manifest itself. I don't need to be in every price run to be profitable at the end of each month or at the end of each year, most importantly. So I'll get into some of the factors that I was looking at this week, some of the things that communicated to me that this market was strong and that we were going to continue rallying. But again, no interest in trading it because you got to have rules. Rules are what keep you in the game. Also, rules are what kick your ass right out of the door if you don't follow them. So looking at the daily chart here, seeing that, again, repricing right into that low there nicely. And then what I'm showing here is two different inefficiencies. We can just go ahead and make that one here. So seeing how we traded up into this level here, and then we closed above it on Wednesday. Once we closed above this inefficiency and into the body of this down close candle, or what we would expect to be a bearish order block, closing into that tells me what this market's strong. So then I took my attention to this swing high here. Why? Again, we're in a deep discount. We're very oversold. And again, we don't need indicators to tell us that. We're just reading the pure price action. We hit that level, we're oversold, and then we expect what? Some measure of retracement. Honestly, was I expecting a retracement up to here? I was not. But again, I'm more likely to be wrong in these weeks. So it's a strength for me to realize that and know to pump the brakes and step back. When I was a younger man, few years ago, 4 years ago, I would be pushing very hard in this market. I would be insisting that I'm right. Okay, I'm going to sell short. And I'd be trying to sell short all week, getting crushed. So again, you have to know when you want to be trading and when it's smart to do so. So again, seeing how we closed into that body here told me it probably warranted a run above this swing high. Why? Anyone that was short, they're going to have stops here. Fund level traders trade like that. So the market's going to want to trade into it to absorb that buy side liquidity. Through that, again, only two reasons the market moves: liquidity and efficiency. We had this fair value gap in here, and then that was a nice target for Thursday. And then seeing how did we trade there? Did we hit midpoint, reject, or did we hit the low end and reject? No, we closed above it. So we got to close above it, or close above this inefficiency here. Seeing that tells me what algorithmically? That the market is strong. It's going to keep reaching higher. So was I shocked when we saw non-farm payroll continue repricing higher? I was not, because again, all these signatures start to come into alignment. So based off what we're seeing, closing above this inefficiency and closing up into the body of this bearish order block. So looking at the 50% here, this was another one of my targets on Friday as we trade up into the 50%. If we start trading through that 50% in our lower time frames with animation, my attention's going to this buy side here. So it'd be the previous month's high, which would be a valid target. So these are all the factors that I'm considering moving forward. Again, if dollar remains bullish, I will expect bearishness to come back into the stock market. But we need to see how we trade at certain levels and how we react at these critical times when we trade there. So seeing how we have equal highs here, and it's the previous month's high. So you have to classify liquidity by time, and it's going to help you out a lot. So seeing that this is previous month's high, we're showing a strong willingness to want to go higher. My target is here. How we trade there will be influential. If we're going to continue bullish, we're going to do what? We're going to displace higher through this inefficiency, or through the liquidity and this red inefficiency. So if we displace through it, close above it, we're going to do what? We're going to use this as a bullish breaker. We're going to use it as support. This red fair value gap is going to become a bullish inversion fair value gap. We're going to find support here and rally if we're bullish. If dollar trades higher and we look for lower prices and indices, I'm going to look for us to trade to this high, strongly reject it lower, and then these inefficiencies here, this BISI here and here, we're going to extend that through, get below it, use it as resistance, and sell off. So again, I'm not calling plan A, plan B. I'm just sharing the factors that I'm looking at that I'm going to be reading moving forward. And again, for those of you guys that are in the Telegram channel, I will continue updating you guys moving forward. every step of the way with what it is that I'm seeing. So those are the two scenarios I'm looking for. So early in the week, expect a repricing into this buy side. How and if we trade there will be influential. Failure to do so and we just reject, then again, we're looking for lower prices. But again, I do expect this to be the draw just because of the price signatures that the algorithm is communicating to me at these specific levels here. All right, so daily chart for NQ. So again, looking at this bearish order block in here that we traded into, hitting the midpoint there beautifully. So looking at the previous week, trading higher, we do what? We close above. What level? Does volume imbalance. So that tells me what? We're bullish. So this candle is going to expand higher. Volume imbalance here, closing right on that high there. Beautiful delivery. Expansion higher. What do? We close above the fair value gap. So what does that tell me? Look for shorts? No. It tells me they're going to keep repricing it higher. So if I'm trying to sell short, I know I'm going to get steamrolled. That's something that experience is going to teach you that you don't have early on if you try to force your bias. So again, seeing how we're closing above these levels, expanding, my best target for early on in the week will be this swing high. But again, how we trade there, if we trade there, all those things are going to be influential moving forward. All right, so let's drop down to the 4-hour chart. It's already going on a bit longer than I was expecting. I think we say that every week just about. Andres, yep, that's what I got this week. Steamrolled. We learned from it, brother. We learned from it. That's why we rather learn in demo. Prefer not to bleed out our hard-earned money. And then once you know what you're doing, you can then transition into live fund trading. So looking at this here on a 4-hour chart, we have market maker buy model. So again, I was not looking for shorts this week at all. This market was clearly indicating it was going higher, and either you want to buy this market or you want to sit on the sidelines. Do not try to force a market that's just continuously pressing higher, because that's the function. We've seen a huge drop lower. So what's every retail Rick thinking? Wow, let me chase this market lower. You know, we're already in a deep discount. We already took the sell side that we were looking at on that daily chart, that market maker model we saw. It's already repriced to those levels. So our targets are hit. We're satisfied. But retail traders, they're looking at it what? Now they have confirmation. They have confirmation that now the market's going lower after it's already done the entire movement. So now what's retail going to look to do? They're going to look to go short. They're going to look to chase that move. So what's this function in price here? Ramming higher. Not allowing anybody looking for lower prices to be profitable. And anyone that was short, that didn't know to distribute at the levels we were looking for and close out their position, they're getting squeezed out of their position. So the algorithm is facilitating that with this aggressive repricing higher in a highly manipulated week, being non-farm payroll and FOMC. Mike Laybourne, member question, do you think the ICT quarterly shift is over? I'm not sure what you're talking about, brother. I know we hit our quarterly shift objectives from the previous month, but I'm still waiting for what's going to unfold going into these next 2 to 3 months. So looking at the 4-hour chart again, looking at higher prices here. So we're not looking at this as hit it, bearish order block, sell off. I'm looking at it as we're going to trade into it, support, rally higher. Daily fair value gap here, the blue shaded rectangle. Again, look at the signatures. We trade through it, we close above it. We open, manipulate, trade through it, close above it. What's this telling me? Look higher. And then we use it as what? Support. So how do you know it's going to be an inversion fair value gap? How do you know it's not going to be 2022 model sell off? You have to understand order flow. You have to understand certain things. But more importantly, experience is going to teach you that. So again, these equal highs here, I like this to finish out this market maker buy model here on a fractal. Again, we hit key external range liquidity. So again, what's the market's going to do? Look to reprice higher for some measure of internal. So this is the biggest liquidity pool here, looking at these equal highs, a lot of open float above those levels. And it is also looking at the, man, I don't want to go too much into this, so I'm just going to keep it brief. So looking at the look back, this being day one, a month one, what I'm doing is I'm taking a look back 20 days. So I'm looking back 20 days here. So 20 bars, I'm looking, what's the highest high and the lowest low? This is one here, so we smoke that, and then this high here. So given that we're so close to it, that's my level of interest. And then what I do with the 20, 40, 60-day look back is I look at the key levels based off time, because IPDA's referring, IPDA is the interbank price delivery algorithm. it's looking for very specific levels, not just random ambiguous levels that it has no reference for. It's looking at specific levels with regard to time. So we look at 20, 40, 60 days. And then what I'm looking at is what highs and lows exist there. And then I try to map out a narrative as to what I'm expecting as to how the market makers are going to utilize that liquidity. Wow, that was pretty succinct and to the point. Awesome. So that's all I wanted to share there. I'm not going to go too deep into if the data ranges, quarterly shifts, and all that here. That's a very dense topic for this, and it's outside the scope of this presentation here. But again, just sharing the things I'm utilizing to call very specific highs and lows. And obviously, we see the market tends to run to those highs or lows that we're looking for. So let me take this off. So again, expecting the market maker buy model to complete, which again would just be a repricing above this original consolidation. And then again, how we trade there will be influential. So these are the two scenarios I'm going to be looking for. If we trade higher above this and we displace and get a close above it, I'll expect us to come down, use this as support, and then expect a rally higher from here. So that's what I'll be looking for if we displace through it and use it as support. However, I'm going to be qualifying this with dollar. So if dollar rallies higher from the key discount level it is, that it's trading at now, I'm going to look for the ES to clear out these highs, sharply reject lower, use this as resistance, and then continue selling off as to what I'm expecting it to do. So those are the scenarios I'm going to be looking for. And again, I've given you guys very specific criteria for how I'm going to validate or invalidate my bias. And then NQ 4-hour chart. I mean, just look at all the bullish signatures here. Again, daily fair value gap. Do we show any respect for it? No, we close above it and then use what? The midpoint support. Who's keying off those levels? This smart money entity that many people don't even know exists. So let me excuse that. So again, hitting that level, finding support. So as long as we remain above this daily fair value gap here, again, I suspect we're going to want to clean out those highs. And then again, how we trade there will be influential. And I've given you guys the scenarios that I'm going to be looking for moving forward. So with that, I know we went on a bit longer, but it is a new month. There's a lot of things that I have to cover and that I was trying to convey to you guys today. So hopefully you guys got something out of that. I'll go ahead and get into some questions now, probably just going through the member questions because we're already a bit late in the day. David Vega, I believe we covered indices for you. Awesome. Lots of bonuses, gems in between the analysis. Awesome. Glad it's helpful. Awesome. Andreas, are you bearish on S&P this upcoming week? So I believe I covered that. Tria, XONE, thanks for the wonderful answer. Absolutely, glad it was helpful. Daniel, what's your favorite book? Quite a few of them. One of the better ones that I like that really opened me up to a lot of things was The Creature of Jekyll Island. 48 Laws of Power is really good. Robert Greene, really good author. Shout out to my man David Vega putting me on the game. And there's another one off the top of my head that I wanted to share, but don't have it in mind right now. Ahmed, something I observed from 2023 to now, S&P, NASDAQ made a higher, I don't know. So yeah, Kraken correlation. Yeah, so Kraken correlation can indicate a larger change in the tide. So that's something I'm considering as well. Again, which is why I'm not very set in my analysis. For example, I'm very fluid and I'm just going to allow the market to show what it wants to do. I'm not trying to force anything. I'm just going to let the next clear, obvious move to show its hand. Just like all these here. Again, rallying to a premium to do what? Sell off. Rallying to a premium to do what? Sell off. I like very easy to read analysis. If I have to look into it too hard, if I have to really force myself to develop a bias, that likely means I just need to wait for more information. But again, the draw's this high. And then again, how we trade there, if we do, will be influential. And then that's going to give me more of reference points to go off of in terms of whether we're going to be bullish or bearish. So that's what I'm looking for moving forward. Christopher, appreciate you saying that. I was not anticipating us to retrace this much. Yeah, I wasn't either, Christopher. I was not either. But I don't really think anyone was, based off everything that we're seeing right now. And again, it's a highly manipulated week, a lot of manual intervention. So definitely not the easiest week to read, again, which is why there's better things to do with my time than trade this week. So it's November 5th. We still got 25 days left in the month, so no rush, no rush. But I know it doesn't feel like that early on. Feels like you got to have your foot on the gas. All gas, no brakes. I got you. I've been there. David Vega, thank you, Mr. Hanson. Appreciate you joining us, brother. Christopher, longer is what we like. Awesome, brother. Glad you're finding the value here. I appreciate that. Mike Laybourne, that answered your question. Awesome, man. Glad I was able to cover that. Andreas, are you doing this prep every week? I really appreciate it. Love to draw my own charts while watching. Yeah, Andreas, I do this every week. I think we're going on, what number is this, Abraham? 51? 51, wow. 51, going strong. Yep, we do this every week. Amy Moore, thanks for the great analysis. As always, love your thoughts on Dow and oil. I'm just going to take a look at Dow real quick, and then we'll touch on crude. So we'll look at the continuous contract. So leaving those equal lows there, I don't really like that. That's not something I like as a bottom. I'm really looking at this price action, tipping my hand a little more to you guys into what I'm seeing. I'm really thinking that they're trying to sell the idea that there is a bottom in the stock market. I'm thinking that this rip rally higher was trying to sell the idea that there is a bottom in the marketplace. I'm not saying there isn't. I'm not saying we can't continue rallying. Just based off what I'm seeing, based off the news articles I read. And again, I'll cover this once more. I don't read news. I don't read Federal Reserve reports for information. I want to see what the predators, what the sharks, what do they want the small fish to think? How are they manipulating their mind into what they're going to expect the stock market to see? Because then that's going to give me more insight. And again, it's a very tough business. This is a very predatory game. There is no money created in the stock market. It is transferred. So either you're taking money or your money's being taken. That's the only two scenarios in the marketplace. So when you understand that, that's the lifeblood of the marketplace, it allows you to understand that, wow, I really got to tighten up. I really got to be sharp, because there are real intellectual predators out here that are looking to take your money if you don't know what you're doing. So with that, just sharing here that I'm thinking that they're trying to sell the idea of a bottom. Looking at the NQ, same thing. And then Dow's the one I was actually touching on. But leaving those equal lows here intact, I think they're building in more orders there to smash through them later on. So again, I'm thinking that they're just building in sentiment that there's a true bottom. But looking at Dow for right now on the present market structure, I like this swing high here and then this inefficiency. And then how we trade there will be influential. So we can trade up into this level here on a weekly chart, and then I would be very interested in seeing how we trade there. If we end up showing signatures of weakness, then I'm going to expect us to smash through these lows here, and then I'd expect the same thing on the E-mini S&P and the NQ. And then if one of the averages fail to make a higher high, again anticipating SMT before the fact, then that would even be further confirmation. So just different things that I'm going to be looking at and weighing out. But again, if we do trade higher and we close above this weekly inefficiency that I had, if we get a closure above it, then we likely use it as support and rally higher. So that's what I'm looking at. That's what I'm considering moving forward. But for, again, indices traders, you got to know what the dollar is doing. So consider dollar. And I was going to take a quick gander at crude oil anyway, so let's go ahead and take a look at that. So looking at this on a monthly chart, I'm going to take this off. I'm still bullish longer term. Not saying we're not bearish in the intraday time frames, but I'm looking at higher prices longer term. Again, we hit this bullish order block in here, aggressive repricing higher. So we can trade lower down into these two consecutive down close candles, which would create another bullish order block. And then we have this inefficiency here. So as long as we can stab into this inefficiency here, but I prefer to see it left open and not even get down to it. So what I'd be interested to see in crude is some type of drop lower. Again, we can reach as far into these two down close candles, but then I'd want to see some type of reaction there longer term. And again, I still think we're going to see upwards of 120, 115 on crude oil going into the next few months. And again, considering the geopolitical events going on around the world, Iran, the saber rattling that's going on in the Middle East, all those things are having to be considered, especially in a market like crude oil, which is highly dependent on all those factors. So some things to consider on crude oil, higher time frame. So we repriced higher on crude oil, taking out this swing high here, and then we left equal highs here and here. So we're retracing into a short-term discount again, which would be reasonable. So if we were going to rally, I shared, we'd have to rally and stay above this fair value gap here. So the fact that we opened, closed down below it, again, that took my attention to lower prices on crude, and then I had to put the bullish bias to the sidelines or on the back burner for the time being until we reach for a deeper discount. So we just traded below this previous swing low here into this bullish order block here on the weekly time frame. So what I'd monitor on crude oil is these two down close candles. I'd see how we trade there moving forward, and that is the key levels that I'm going to be watching on crude. So yeah, not the cleanest price action, which again is why I haven't been too interested in this market. I think this market is just really waiting for the next shoe to drop on the war front around the world. So I think it's going to be more of an event-driven market until, again, things start to normalize. But again, with everything going on, who knows when we're going to reach that normal or equilibrium again. So what I'm going to be monitoring on crude is this swing low here. We can trade down deeper into it, and then how we trade there will be influential. If we start to get animated through this low here with displacement, my attention is going to go right here to crude oil. So as long as you remain below this bearish order block in here, you see we hit it once, twice, sold off. As long as we remain below this down close candle in here, my attention is going to go to these 3 consecutive down close candles. So this bullish order block would be a valid first target, and then animation through that, my attention goes to this swing low, and then we could see 75.50 a barrel on crude oil in the near future. But again, all this can change very, very abruptly. I mean, we could open $5, $10 higher again with the climate we're in. So take this with a grain of salt. We have to see how we open, how we trade Sunday going into Monday. A lot of different things to consider there. But because we opened the new month, again, we can still trade lower. But again, those are the specific factors I'm going to be weighing out moving forward. So hopefully that covers your question, Amy. Mustafa, we are going to make a new high. Awesome, man. Awesome. Mike Laybourne answered my question. Awesome. What's the most important ICT playlist in your opinion? I wanted to watch all of them, but need to start somewhere. I'm 80% in on 2022. So after 2022 mentorship, my recommendation for study purposes would be going through core content. And then after core content, I think there is lots of value to be gleaned from 2023 mentorship. But it's not the best for beginners in my opinion, because there's a lot of things you have to know to really be able to absorb what he's sharing in that 2023 mentorship. So I think you should, one, get more experience, finish 2022, core content, and I think that'll give you a better start going into 2023. But that's how I would study it if I had to start all over again. David Vega, thank you, Dylan. You've given me all I needed. Awesome, brother. Anita Lowe, wonderful analysis as always. Thank you. Thank you. Glad you were able to join us. Daniel, thank you for your time. Absolutely. Anita Lowe, hit that like button. Yes, guys, please do. Very much appreciate it. Man, we get like hundreds of you. By the time we close it out, there's like 300, 400 people, and we're only at 100 likes. I know a lot of you guys are just there taking the value, not showing any of the love. So we gotta change that around. So don't forget to hit that like button. It doesn't cost you anything, but it helps us out here. So... There are some times when the dollar, S&P and NASDAQ move in tandem. How do you deal with that? That's more of a manipulated environment, but markets being unsymmetrical can happen again, especially with the conditions we're in now. That's something that's very likely. But when we do have indices and dollar moving in the same direction, it tends to be what's called high resistance, which means it's not delivering as cleanly. So if I see that, that's a signature that's confirming to me I probably don't want to be doing a whole lot during that time. Abraham De La Cruz, COT reports. Appreciate the reminder, brother. With COT, so Tommy written this up, great analysis. So what I'm going to go ahead and do is start sharing the COT analysis starting next week. We're going to send a little report starting Sundays of a write-up of our analysis of the COT. And again, it's not a be-all, end-all. It's not a holy grail, but it's something, again, to confirm the technical analysis. So thanks for that point there, Abraham. Appreciate it, brother. Daniel, did you go to college? I did, but the real learning started when I dropped out. Real learning started when I left college. College is designed to train employees, and I'm working every day, but I damn sure ain't punching a clock. So, in my opinion, waste of time, force-fed bullshit, and nothing valuable to be learned there. Again, all the real education started when I started teaching myself. So Matthew Davis, I got you with the COT report explanation, brother. I got you covered with that. We'll send that in. Denisha, thanks for the analysis. Have a profitable week. Awesome. Thanks for joining us, and you as well, Denisha. David, is the 20, 40, 60-day look back the same thing as purge and revert? No, they're two different things. Purge and revert is a very specific context for why we see a retracement. 20, 40, 60-day look back just tells me what PD arrays are going to be more sensitive, what liquidity pools is the algorithm likely going to refer to. So they're two different things there, brother. Guarav, what is the date for the website to launch, Dylan? Probably this coming week. Probably this coming week is what we're looking for. Still finishing up some stuff on the legal side, wrapping up a few ends with the website itself. But we'll be looking to rock and roll this month to begin enrollment again, so we can get to work come January. All right, so let me get to the last few member questions, then we're gonna go ahead and get going. Earl Garrison, would you consider the DXY trading above the 108 range, breaking out of consolidation? Let me go ahead and take a look at dollar. I know the 108 range, it's imprinted in my mind if we've been as we've been there for the past 3 months, it feels like. So let's go ahead and zoom into this on a daily chart. So 108 for dollar. So what I would look at as breaking out of the range would be getting above this swing high here decisively. So if we get above this high here decisively, then I'm going to look at this as leaving the range. But in my opinion, we already have. Again, I already covered how we're likely going to see. If we are going to remain bullish, I'm looking at this as some type of accumulation, again, manipulation, distribution. So looking at the daily chart, we're in manipulation. Where are we going to rally from? The monthly discount array. So in my opinion, because we've already broken out of the consolidation, this is now a very tradable market in my opinion. And I do expect the foreign exchange market to start moving around as a result as well. So in my opinion, we're already out of the range, but we need to see how we trade at these key levels moving forward. And again, I shared all those factors that we'd be looking for. So hopefully that covers your question, Earl. Amy Moore, as always, awesome insights. Thank you. All right, so I believe those are all the member questions. So I appreciate everyone joining us today. Eubine, thank you for today. Absolutely, brother. Olawale, thank you. My pleasure. Christopher, great session as always. Thank you for your time. Absolutely, brother. D'Angelo, thank you. Great pre-market prep. Happy to help, brother. Daniel, I'm at a crossroads where I want to focus all my energy on this, but university has taken all my focus away from this. It's hard because it drains all my energy, leaving me with none to focus on this. Oh, Daniel, you have no idea, brother. We went the same route. I had to pick myself up by the bootstraps while in university, get myself out of the trenches, and learn this while I was managing both things and a full-time athlete on scholarship at the same time. So I know it's definitely a commitment. There's definitely a lot to it, but it's going to definitely take some sacrifice if you want to. I never tell anybody quit your job, drop out of university, because again, this is very tough and it takes time to learn. You don't want to have to depend on what you're eating, the food on your plate, your rent, you don't want it to hinge on your trading early on in your career. Once you're more seasoned, once you're consistently profitable for minimum 1 year, 2 years, I would say would be a good benchmark. Then you can start looking to make changes in your life. But again, one of the biggest things I see as mistakes is people look to do this full time way too early when they're unequipped to do so. So that's my viewpoint on that. But again, that's your decision, Daniel. And I wish you the best of luck on your journey, brother. I know it's not easy. I know it's not easy. David Lombard, classy as always. Thanks for your insight. Thanks for joining us, brother. Rich Carey, thanks, Dylan. Awesome as always. Appreciate you joining us, Rich. Daniel, I'm planning on taking a quarter off. Who knows what will happen after that? Just keep putting in the work, brother. You'll be surprised. Keep putting in the work, my man. You being LOL, I wish Carl wouldn't drain all my energy. Yeah, there's always a Carl, man. There's always a Carl. For sure. Earl, that makes sense. Awesome. If you need me to clarify anything, just reach out to me. You know where to hit me out, brother. Michael Miller, what's coming up with the new website? So again, I've been getting a lot of interest in training people privately. A lot of people want to work under my tutelage and open up my private training again. So that's something I'm going to look to do in January. And again, all those details will be on the website, which is why we're all eagerly anticipating it. So if that covers your question there, Michael. Anita Lowe, we'll get there. Absolutely. Matthew Davis, you're the best, Dylan. I'm in university too, like others. Parents are paying, but I can't wait to go full time with this. Best of luck with you, Matthew. Godspeed, brother. Godspeed. Jezen, thanks, Dylan. Absolutely. All right, guys. So I appreciate your time. I believe those are all the member questions. So a little bit of a detailed analysis today because, again, it's a new month, so a lot of things to consider and weigh out. But I trust you guys know what we're looking for going into this week. So I wish you guys the best of luck, good luck, and good trading. Take care, everyone.